Welcome to Gaming Fin, your channel for everything related to the gaming industry and the stock market. And today we have a new video, and of course we're going to talk about Activision Blizzard. We recently had the Activision Blizzard earnings and the deal for the Microsoft acquisition of Activision Blizzard. Oh my god, this was complicated. Has been approved by the shareholders. I'm personally invested in Activision Blizzard. This is my disclaimer, and also I'm not a financial advisor. I'm just a retail investor that shares his opinion here on YouTube for information and especially entertainment purposes. So make up your own mind and don't invest in anything I'm talking about here. So let's put this aside, guys. So this is my channel, you know it. So check out also my other videos, comment, like, and subscribe, of course. But today we talk about Activision Blizzard. So if you check now the latest value of Activision Blizzard, you see that the stock is only $75.6 worth, and it was dropping 1.43%. 1.43%, and then even after hours 0.13% more. So why? I mean, Microsoft said they are going to acquire Activision Blizzard for $95. Is it that actually the Wall Street is betting that Microsoft-Activision deal will fail? Is this the reason, guys? So I mean, this is a 24% premium on where we are now. So 24%, you could make 24%. Actually, hedge fund managers, I don't know, big investors, banks, they could all make 24%, because this means that Microsoft is going to acquire Activision Blizzard. It doesn't matter. No one cares about the earnings anymore. Actually, Activision Blizzard doesn't even care about the earnings anymore. So yeah, here Activision misses estimates on lackluster Call of Duty. Here the Bloomberg article, my friends, and we see adjusted revenue in the first quarter fell 28% to only 1.48 US dollar billion. So the company said in a statement on Monday, and analysts had expected 1.81 billion. So that's almost a little bit less than 400 million US dollars. Adjusted earnings per share were only 38 cents compared with estimates of 72 cents, according to data compiled by Bloomberg. Check out, I put the links, of course, in the description of this video. So yeah, what's the reason? Call of Duty Vanguard kind of failed. So latest entry in Activision's biggest video game series. I'm a big fan of Call of Duty. I like those games. But then they also say, yeah, actually the WW2, also the World War II setting is not so successful like the Modern Warfare setting. Well, for this reason, guys, so here's the press release. For this reason, we get a Modern Warfare setting. Not this year. Next year, no, we get it this year, and then we don't get a new game in 23. So we get the next game only then in 24. So Activision Blizzard is actually stopping. They are stopping the 1 year cycle of their Call of Duty games, and I think that's very good, because the 1 year cycle, it was just, for me as a gamer, was too fast. And I would also say from an investment point of view, you can milk one game like Warzone, Call of Duty Warzone, you can milk this much longer, over a longer time. So, and you don't need to bring out a new Call of Duty every year. Maybe 2 years is a good start, and then maybe only every 3 years. So this would also be a good way forward. All right, so let's look here. Announced first quarter 2022 financial results. Here we can see, you can see actually impact or GAAP deferral. So that's of course a little bit financial engineering. So it's always difficult to say. Yeah, EPS, earnings per share, you see it's clearly down, but here it's not so clear like it is actually in the press article. Therefore, I'm not going to annoy you with those numbers here, because you see they are down. So for the first quarter, actually net bookings were 1.48 as compared to 2.07 billion for the first quarter 1 year ago. So, and also here in-game net bookings were less. Microsoft transaction, so going to happen in the fiscal year that ends 2023, June 30, 2023. So hopefully it happens then soon, because the situation we have now is also not really great. So because look, guys, So jumping back to the chart. Oh, that's CD Projekt. So jumping back to the chart. So I'm invested now in Activision Blizzard. So I expected now to sell my shares for $95, and I hope that the FTC. No, what is it? The FTC. Then they FSC, Financial Securities Commission. Yes, that they are going to. Then they are going to allow this. So it's not a done deal. It's not a done deal that they're going to allow it. They are the Federal Trade Commission. It's not a done deal that they allow it. So, for example, they were not allowing that Nvidia acquires ARM. They were not allowing that Lockheed Martin acquires Aerojet Rocketdyne. So, but on the other hand, Michael Bratchter, for example, he's a popular video games analyst. So he says, yeah, he expects this actually going through. So I hope it goes through now, because when it's not going through, to be honest, when it's not going through, then those terrible earnings would have a huge impact on the stock chart. So also, if you compare it to the Nasdaq, where I have the Nasdaq here, only Netflix. Every time I start trading view again, it jumps back to Meta, so that's great. But Meta had a good run, so yeah, we don't see the Nasdaq now here immediately. So the Nasdaq overall was falling massively, and therefore, guys, I would expect actually Activision Blizzard stock now being like probably with the $50 or $40 range. So if this deal was not coming out this year. So that's the reason. That's the reason why I think it's good that we have this deal, and I want to get this deal done now. But on the other hand, if I'm just thinking as someone who invested very long time ago already here in 2017, I invested. No, I think no, in 2018 and 17. So I invested in Activision Blizzard, and I have to say that all this time I was like, guys, so I'm believing in Activision Blizzard for the long term. So, and then all this FUD was coming, Kotaku and so on. They were getting super annoying and unionizing and all of this. So I don't care about this, to be honest. I want to make money, So I expect actually Activision Blizzard to be a good growth company, a gaming growth company for the long term, and I would have held it. I would even have bought more if I would still, if it would be down now. But now I'm just waiting. I'm just waiting that I get my premium, that I get my 24% premium, my $20 premium on the stock. So I have nothing else to do. So am I going to buy now more just to have the risk that when the deal is not going through, that then my Activision stocks are falling to $40, $50 and I'm losing all this money? No, of course not. I'm just sitting this out now. So is it happening? Is it happening? Is it happening? Here we are again. Yeah, I hope it's happening, even if the FTC might get annoying. So might get some legal claims against it, because the numbers are not good, guys. The numbers are really, really not good. So, and I think that's also the problem now with Activision Blizzard, and they're also waiting a little bit for all those new structural reforms that are happening. So here, Activision Blizzard, and then maybe what is interesting, the Diablo Immortal will launch the 2nd June in 2022, also coming on mobile and on Windows PC. And then games that are very much awaited are Diablo 4 and Overwatch 2, progressing well, they say here. Company-wide internal testing of Diablo 4 is underway, and external testing of the player versus player mode of Overwatch 2 begins tomorrow, the 26th. Oh, okay, that's cool. I didn't get this actually. So, and here, that's actually amazing. So Candy Crush was the top grossing game franchise in the US app stores for the 19th consecutive quarter. So Candy Crush, so the favorite game of your mom or your grandmother. So King is also part of Activision Blizzard, as you know. All right, guys, so I hope you got some information out of this. So a little conclusion: the earnings were really bad in normal times due to the overall market drawdown, and those bad earnings, Activision Blizzard would be much lower. But since we are not in normal times, so we are waiting that Microsoft takes over Activision. We are trading now under a 24% premium to the 95 price tag, dollars that have been offered by Microsoft. So like if you're like me, you invested in Activision Blizzard, and probably you just wait until the deals go through. But our biggest risk, guys, our biggest risk is that Activision Blizzard will not be acquired, that the deal is not going through, that the deal will fail. So this is a risk, and I think it's realistic. I don't buy all these arguments here in this article I put you in the description there. But yeah, I think there's a chance that it's not going to go through. And then everyone loses interest, and then we see the price really getting devastated. So, and I hope that not before. And let's be honest, so insiders probably sell even before this deal goes through. All right, so if they find out the deal is not going through, then the insiders sell, and then the price goes already down. So retail investors like us, we will not have any chance here. So we can just wait and see. So for this reason, it's actually a very risky investment. And with all those misses here, look at this, terrible. So average price tag is $94, and you see all those downgrades, really bad. All right, thank you very much, guys, for watching. See you the next time. Bye bye.